Well, I do like this Sniffy Joe tax proposal. Good on him. So I'm sure Sniffy and Dr. Jill were sitting up late at night, burning the midnight oil, working on his tax regulation that they want to suggest to Congress to pass. We only get the best of the brightest in Washington, D.C., Sniffy and Jill. All right, so let's go over here to limit use of donor-advised funds to avoid a private foundation payout requirement. Essentially, what happens with a private foundation is you got to distribute 5% of your assets on an annual basis to maintain the tax benefits of being a private foundation. All right, qualifying distributions include amounts paid to accomplish religious, charitable, scientific, or educational purposes, as well as reasonable and necessary admin expenses paid by the foundation to further its charitable purposes. This very next paragraph. Qualifying distributions do not include the private foundation's contributions to either an organization directly controlled or indirectly by the private foundation's disqualifying persons. All right, so that makes, come here, big guy. What is a disqualified person? Are defined generally as substantial contributors to the foundation, foundation managers, owners of more than 20% of certain entities that are substantial contributors to the foundation. So basically, it's people who are involved actively and heavily in the foundation. All right. So we see right here that to qualify for a distribution in a private foundation, you cannot include amounts that you give to you can't make contributions to another organization that's controlled directly or indirectly by the disqualified members. Does that make sense? Yes, it does. However, a private foundation can set up donor-advised funds, and yet there is currently no requirements that amounts held in a donor-advised fund, be distributed with any period of time. Under current law, a distribution by a private foundation to a donor-advised fund is generally considered a qualifying distribution. Because a private foundation has an advisory privileges with respect to a donor-advised fund to which it contributes, and because there's no requirement for the DAF to make further distribution of the funds for charitable purposes, it is not appropriate for a private foundation to satisfy its distribution requirement by making a distribution to a donor-advised fund. 100%. So what's happening here is they're saying, this is insane to me. How this allowed to be happen, I don't know. We are the Ford Foundation. We're going to set up a donor. Now, we can't make distributions to entities that we are in control. So we got Mr. Ford. He sets up the Ford Foundation. You know what I'm saying? He goes, all right, I'm going to make distributions, but it can't be to an organization that I'm also in control of if I want to maintain my foundation's tax status. With a donor-advised fund, though, Mr. Ford can set up a donor-advised fund that he's in control of, make a distribution from the private foundation to said donor-advised fund for which he's in control of, and not make any distributions from that fund, and also be elected that's still a qualified distribution. It's insanity, man. The proposal would clarify that distribution by a private foundation to a donor-advised fund is not a qualifying distribution unless the donor-advised funds are expended as a qualified distribution. I mean, if we're going to make the distribution to the DAF also has to make a distribution as well, which does not include a distribution to another donor-advised fund. All right. The private foundation maintains accurate records or other evidence showing that the donor-advised fund has made a qualifying distribution with the required time frame. 100%. Basically, they're saying we're not going to allow Mr. Ford's foundation to set up a donor-advised fund for which they control and not have that donor-advised fund be required to make distributions to charitable entities. That's crazy. Part two of this is that this is insane. This is why, dude, I just don't know why the Republicans don't hit on that. I do know, because they're the Washington Generals. I get it. They are paid to play a certain role. Man, the private foundation industry is just rife of left-wing insanity. I don't get why the Republicans don't hit on this. I just don't get it. It's the weirdest thing. They hate you people. They hate Republicans. And yet you just allow them to go willy-nilly, because they'll throw a bone every now and again at you. It's insane. It's just kind of like how the Republicans never got rid of funding NPR. Or Planned Parenthood. It's so stupid. Private non-operating foundations are generally required to distribute 5% of their total fair market value of their non-charitable assets on the preceding taxable year, just we said. So they got to distribute 5% of their assets, all right, each and every year. All right. Qualifying distributions include amounts paid to accomplish religious, charitable, scientific, and educational purposes, as well as reasonable, necessary admin expenses. All right, so we're going to talk about admin expenses. Paying compensation or reimbursing expenses by a private foundation to a disqualified person is generally an act of self-dealing. Again, a disqualifying person is someone who has a lot of control in the entity itself. So we're not going to allow the foundation to give Mr. Ford money for his flying all over the world, telling the world about global warming. You see, we're not going to allow that to happen. He's a disqualified. That's not a qualifying distribution. If we're going to pay Mr. Ford to take money from the entity, we still have to take 5% to give to charitable entities as well. All right, let's keep going. The general rule does not apply, however, to the extent that the payments, which cannot be excessive, are for personal services that are reasonable and necessary to carry out the charitable foundation exempt purposes, i.e. these insane dinners, fundraising dinners that are we're going to have a fundraising dinner in freaking, I don't know, Mar-a-Lago or something, some rich place, freaking Monaco. And we're going to spend millions of dollars on this fundraising dinner. That's all because it goes to right here. It goes to the reasonable and necessary to carry out the foundation's exempt purposes. And all that money we use essentially is a cost of doing business. So that will be part of our 5% distribution requirements. It's insanity. Check this out. Some private foundations meet their entire payout requirements by hiring family members. The intent of the payout requirement is to ensure a private foundation use at least 5% of the total fair market value for charitable purposes. Allowing payments to disqualified persons to count towards a private foundation's payout requirement does not meet this intent to directly further charitable purposes. Dude, 100%, man. I could not agree more. I mean, literally, take out a couple things. Take out a couple things in Sniffy Joe's stupid tax proposals and just hammer these foundations. I'd be a happy camper. I would be a happy camper. All right. Love your thoughts. God bless. We'll see you.